Good evening. This is Andy with Special Academy, and we're on the start of the week session for the Forex Trading Room on February 23rd of 2020. We'll go through our usual agenda. I'll look at the prior week, our currency strength meter, calendar of announcements coming up, a look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Haven't opened any trades in a couple of weeks, so this account is all cash right now. Um, what can I say? I haven't seen any really long-term opportunities I would like to take. That'll change at some point. Intermediate term had a huge boost this week. We're up more than 14% on realized gains from the week before. We have a couple of trades still open. One of them, the Aussie CAD, is carrying quite a nice chunk of profit. The other one, Euro CAD, is still slightly negative. The Euro has had a bit of a bounce since the end of last week, and we'll take a look at that in the charts. So we have only two trades open right now. We took a huge amount of profit on open trades that we had been carrying anywhere from a couple of weeks to these all closed out in our favor last week as the market started doing a pretty heavy retrace on Friday, which again we'll see in the charts. We're waiting to see what's going to happen as the week begins. Some of these we may indeed enter again. We'll do some re-entries, or if it looks like the market is definitely retracing, we'll start making money in the other direction. Still too soon to tell. The market did open already. I've been closely taking a look at the charts that were tracking, or rather the trades that we had opened and closed last week, and they're still pretty much at the same levels they ended Friday. So not a whole lot of movement in either direction so far, so too soon to tell. We're going to have to give it about 24 hours to see if the market does pick up some direction at the beginning of the week. So we're going to be very cautious. We want to give as little of these gains back as possible. You know, we're going to have to give some of them back. It's a very nature of trading, not take risk to make money, but we try to be conservative in that regard as possible. So more to come on that as the week begins. The short-term order had a pretty good week as well. We were up almost, not quite 5%. We're back to profit on this account as well. So we did have a rather steep drawdown sometime late last year. It took us down, I forget how much, around 20% or so we were down. We're back up. We're up above our initial capital, so the account is back in profit. Job well done there. I did say in December that I was rebalancing this account and changing the methodology, and that seems to have worked. So we'll continue doing what we've been doing and see how far up we can continue driving this account. It's an opportunity I just mentioned on the short-term account. Well, February keeps delivering. We've had just a spectacular month from the very beginning. February worked in our favor. Friday, however, saw a significant retrace, which did take us out at profit on multiple trades. We're on standby right now to see how the week is going to begin. Is it going to reverse? Is it going to continue? And as always, our reminder that our live event is coming up quickly, April 29th, 30th, and May 1st of 2020 in Wilkes-Barre, Pennsylvania. Details on our website, through emails that you've all gotten, this, that, and the other. And, well, that's pretty much it. Hope to see as many people there as possible. Relative strength meter for the past week and the past 30 days. Look at that volatility for the month. Is very close to 9% right now. We can see some clear losers in the Australian, the New Zealand, to some degree, the yen have been the clear losers. The dollar, the clear winner. The dollar has had a huge bullish run and is currently at 3-year highs. So not sure how far up it can still go, but it is in a nice bullish trend right now. The Canadian wasn't bad for the month, definitely a gainer. The Swiss was also up there. The euro, the pound were pretty middle of the pack. They weren't the worst, but they certainly are not doing well. The metals continued outperforming. In times of uncertainty, people are going to turn towards gold and silver. And in fact, I do expect significant movement in the metals market throughout the course of this year, simply because they have been lagging. It's time for silver and gold to do a little bit of catching up. So the deepest blue you see in that monthly chart is on the gold column. So gold was the biggest mover of the month. On the weekly, it was a very volatile week, almost close to 6%. That's huge. Normally, it's anywhere between 1 to 1.5, maybe 2% on a very volatile week. We had 3 times as much this time. Again, the metals were the biggest movers, but we did have some very good moves by the Australian dollar. The yen, of course, completely collapsed, and it's being blamed on the coronavirus, which is funny. The Australian is collapsing on the back of the coronavirus as well, and probably for very different reasons. So we have the coronavirus being good for the dollar and other currencies for some reason, bad for the yen, bad for the Australian. We'll cover that in a little bit more detail in a future slide in this presentation, but it is very odd, and I'm not totally convinced that that is it. But anyway, Australian, Japanese yen, Kiwi were the clear losers. The dollar made some significant gains throughout the week, and we'll see that in the charts. But Friday had a little bit of a retrace, taking the luster off of the dollar. So it didn't. The chart for the week doesn't look as good as it should, but we can see on the monthly that dollar was the clear winner overall. Other than the metals. Pound was very middle of the pack. Euro is still collapsing. The Swiss managed to make a few gains throughout the week, but not to any significant degree. And again, most of this happened really on Friday. So if we had ended the week on Thursday, this chart would look very different. Friday, however, did a job on the different strengths that we saw throughout the week. Anyway, that's where we are. A little bit of a dicey analysis there. There's not a lot to say because it was very chaotic towards the end of the week. But again, we'll look at that in the charts. Our calendar of announcements for the week is very light. In fact, there will be no live trading on any fundamental announcements. There's just nothing there that I would like to trade. Inflation report out of the UK and a bunch of GDP and durable goods orders out of the US. Nothing that I would consider getting up for or staying up for, as the case may be. So no fundamentals for the week. With that, we go to our oil. Starting off with oil, we see that after it bottomed out at the 50-50, it has started slowly going back up. It's still nowhere near the middle or even the first third of the chart on its way back up, but we can definitely see that 50-50 as a bottom. Even if it continues dropping, it's probably not more than that. Euro dollar, and this is probably was one of our bigger money makers for the week that just ended. We caught that entire slide down. It broke the floor. It kept going, made new lows, made lower lows, and then Friday we can see that very steep retrace. So this is one of those where, all things being equal, I think it's, so I'm going to wait for that opportunity to see a turnaround and try to go for an even lower low. But of course, I'll have to wait to see exactly how the market does react. So I'm still very bearish. Anybody would be bearish on this chart. I'm not looking for opportunities to go long unless it does break several levels of resistance above it. So this is going to be a waiting game. If I see the right opportunity, I will go short again. And on another note, we're pretty much at 50% gains on the intermediate term account. And I should have mentioned this earlier, but we're probably going to start slowly raising the lot size we're trading, since we're now at a milestone advantage as regards to equity in that account. So I'll send something out in that regard just in case anybody needs to adjust how they're using the copy trader. I'll let people know before we actually do any. So that out. And of course, if you have any questions in that regard, do let me know. Pound dollar continues trying to go down, but it is finding support. And again, Friday we saw that retrace. So the entire week was bearish. It didn't go much below the prior low. And then on Friday, it went halfway back up. So another one where we took profit, and we're waiting to see if we get another opportunity to go short. JPY was probably the worst hit of the, I should say the yen was the worst hit of the currencies, and we can see that in the USD JPY. The entire week was just a bullish route. Again, they're blaming it on the coronavirus, but here's the thing. What everybody's saying is that the coronavirus's impact is not going to be as bad as thought. So they're actually good. Despite the fact that there is no cure, that people are still dying left and right, and there's quarantines in place and quarantine zones, cities where people are not allowed to leave or enter, this, that, and the other. Not just in China, we have quarantine cities in Italy right now. And of course, there is a fear of it spreading even wider. Despite that, they're saying that the impact is not going to be as bad. That's why the yen weakened, because its status as a safe haven was no longer needed. So money started going out of Japan for that reason. I don't see that. I don't quite understand that reasoning. And I'll play the flip side of that when we look at the Australian, but this just makes no sense to me. So I would suspect that we have a very good opportunity to trade the yen back down into strength at some point in the very near future. I those highs holding. And of course, Friday was a retrace in this pair as well. USD Canadian, very chaotic week. It really didn't go anywhere. It went up, it went down, and went up, it went down, and finished the week not too far from where it had started. It's still looking like it might want to take a trip towards the bottom. I'm going to wait till I see the trend line get tested. I'll decide whether I want to put some money on it towards a Kumo cross. For now, I'm just observing this one. That is still a bullish trend right now. Until it does break that trend line, it is in bullish mode. USD sweat, the other one where we took quite a nice chunk of profit last week as it crossed out of the Kumo towards the top. We were holding out for it to get to parity. But again, Friday, look at that massive retreat. So our trailing stop did take us out. Had it not taken us out, I would not have been pleased. That is just too much open profit to give back to the market. We can always get back into a trade. We did not need to suffer through a retracement the size of that one. It went back to the prior highs and back to the middle of the cloud. That's not a good thing. So we'll see where it ends, or rather where it starts to weak, and take it from there. Aussie dollar is what I want to comment on. So the Aussie dollar is the exact opposite of the yen. So people are saying that the impact of the coronavirus is so harsh, so dire, so bad that the Australian is collapsing. Chinese tourism to Australia is a big component of their, or rather a measurable component of your economy. So that's gone to pieces. That's not going to be happening. There will be no Chinese tourism. But then again, there's not going to be any Chinese tourism to the U.S. either. And that's about 5 million visitors a year, I think, or a month. I don't even know. Anyway, it's in the millions. So Australian dollar is being pummeled by the effect of the coronavirus. And the dollar is doing quite nicely, and the yen is doing poorly. And again, it just makes no sense to me. When things don't make sense, I hope for things to change very rapidly to adjust for that, and that's where we can capture a nice amount of pips. However, with the Australian, I do think that there is reason to be bearish, and I think we haven't seen the lowest lows yet. So I am still very much bearish on the Australian pairs. We're currently in the Aussie CAD. We're carrying more than 100 pips on that one trade, and I may re-enter the Aussie dollar in the same direction down, depending on how this week begins. Kiwi dollar, same thing. It's making a nice beeline towards the bottom of the chart. Friday's retrace did take us out at profit, and this is another one where I'll be looking for an opportunity to jump back in the same direction. Still with the same target of getting at least to the bottom of this chart and perhaps seeing a breakout even lower. Aussie Canadian, as we can see, this one not only dropped like a rock, but on Friday, it didn't retrace almost anything. We don't even have a bullish candle here. It was a bearish candle that retraced halfway back up. So we're still in this trade. We're carrying some nice profit. It's broken its prior bottom. It broke it on Thursday, and it just kept going. Right now, it has no bottom. So we're waiting to see how far this thing can drop. Euro for the week, really. I mean, it just hugged that bottom line and didn't move anywhere. We did have a pending order to go in short that came close to being triggered a few times. I just didn't see the momentum. And I was afraid that if we got taken into that pending order, it would then retrace back to the next level of resistance up. And while that wouldn't have been a terrible situation, I don't think there's even 100 pips there. Why risk it? So I did remove the pending order, and I'll look to be entering manually if I see a good movement or just play it by ear. Euro pound, a pair other than for shorter term opportunities because it seems to be just bouncing up and down. No exception here. The euro's bouncing, the euro's dropping, I'm sorry. The pound is bouncy, so it's refused of this chart, but it's also refused to go above resistance. So it's just stuck there between those two red lines. While it remains there, we will leave it alone. Euro JPY, this is another perfect opportunity for a short. I don't believe that the yen can continue weakening for no good reason at all. Plus, we have those very nice long wicks at the top of the last two candles. That's just it moved about 300 pips. We did take profit on a trade, I think. And then, well, we're out and we're waiting for the next opportunity to go short. I suspect that if it does drop below the 120.75, that level of support right below the price it ended on Friday, I am going to want to go in short and pick up an extra 300 to 400 pips very easily. European, another one we took profit and got taken out on the retrace on Friday, and yet another one that'll be looking for opportunities to re-enter in the same direction. This is a very nice bearish chart after it broke the bottom. Pound JPY, as with most pound pairs, it is pretty much stuck in a groove, so it's very sideways. It did break towards the top on Friday, but again, this is more yen weakness, the inexplicable, than anything that the pound's been doing. And right now, there is also a 300 pip opportunity right there, just trading it back to the very bottom of the sideways channel. We don't even need for it to break out. Just from where it is right now to the bottom is 300 pips. So I'll be looking for that opportunity as well on every single yen pair. We may go all in on the yen if I see it start moving into strength. As we can see, the Aussie was weakening as well, so we don't see that that continuation of yen weakness. We have one very bullish candle. I think that is Wednesday's candle, and then it just started trickling down the remainder of the week. So you can see the yen weakness here as well as in other charts because it's being overshadowed by the Aussie weakness. But this one is another one I would expect to have a very if the yen starts recovering. Euro New Zealand, once one of my favorite pairs. I've been avoiding it for a while now, and this is why. It's doing some very odd swings. So it's dropping 200 pips in a couple of days and then going up 200 pips in another couple of days. That's a nice roller coaster if you can catch the ride at the right time, but it's also very unpredictable and very easy to get caught on the wrong side of that. So until it starts showing a little bit more decisiveness and stability, I'm going to be leaving it be. Pound Canadian, yet another one leader give us that trip to the bottom. We took some profit, not a whole lot, 50 pips or so, towards the end of last week on an intermediate account trade, and still looking for a good breakout towards. No rush; it'll happen when it happens. And last but not least, the pound Swiss, pretty much the same thing. The pound did a bit of a recovery on Friday, as we saw on the other charts. You can't see it that well here. Didn't move all that much. Plus, it had already been moving into Swiss strength pretty much all week. Not a whole lot of movement, but still, it was a good U-turn, a good bounce back. But it never got to the bottommost the lows there that support at the 125.50. So I would be waiting for a break of that in order to trade it down as far as it wants to go, maybe to the 116 all the way at the bottom. So that's where we are right now with the charts. So this is going to be, for one, this is the first week in quite a while where we don't have 7, 8, 9, or 10 trades open on the accounts to shepherd. So we're going to have to don't have any trades open. Well, the good thing is you can't lose any money, but you can't make any money either. So this week we're going to be looking for those opportunities to get back in. And on that note, on the UK, on the pound pairs, as I mentioned, I'm still waiting on direction from the pound. It seems to be going sideways. At some point it will move. It'll do it on its own schedule. We're just going to be there for the ride. The dollar has been a good mover all month, but can it maintain the trend after breaking out so massively? Again, 3-year highs for the dollar, the highest it's been since 2017. That is very significant. Can it continue doing that? I don't know. We're in an election year. It looks like the Democratic Party is in disarray. The impeachment against President Trump failed. So there's that, and that seems to be propping up the economy and the stock market and this, that, and the other. The coronavirus impact to the U.S., I estimate is going to be huge. Not because we're going to start getting sick here or dying, though that may happen, but because a lot of the stuff you buy in the stores here in the United States comes from China. Chinese factories are at a standstill right now. People are stuck in their apartments, quarantined. They can't go to work. Factories are closed. There is no production. So the stuff you're buying in Walmart right now that says made in China, that may have been here for 6 months, and there may be another 6 months worth of supplies there. At some point, we're going to run out. So all the cheap Chinese crap, no offense, is not going to be there after a while unless the situation gets resolved like immediately. And I don't see that happening. So the impact to the US is going to be felt at some point. It looks like nobody is looking that far ahead. I like to look that far ahead. So be careful with the dollar. At some point, we're going to have to pay for that. But for now, the dollar is getting stronger. And if it's getting stronger, we're going to trade it in that direction. The Australian pair, the Aussie pairs, is facing not only, the Australian is facing not only its pre-existing conditions, the Australian economy is already in a mess, but now the coronavirus impact is being felt as well. As I mentioned, just the Chinese tourism is being seen as a huge impact to the Australian economy right now. That's been in their news cycle, it's been in their political discussions, and of course the Australian dollar is going to show the impact. which is why I don't see the Australian dollar getting stronger anytime soon. I'm still going to be trying to trade it down as much as I can. The yen was collapsing again, blame mainly on the coronavirus issue, but on the opposite side, that all is well. So no need for a safe haven currency. I don't see that. So that comeback on the yen may happen at any time, and we have to be ready for it. I'm very likely going to be setting up pending orders to take us into yen trades, into yen strength as early as tonight. So look at that. And the euro, of course, the euro keeps falling. And whatever I said about the Chinese supply chain impact to the U.S., that goes double for the Europeans. So the euro really doesn't have anything good to say for it right now. And the fact that it's been dropping like a stone pretty much proves it. So it had a bit of a comeback on Friday, but is it retracing? I don't think so. I think it's going to fall further, or the best case scenario for the Europeans, of course, not for us. Best case scenario is going to go flat for a time. So, as always, we're mainly technical, so we're going to be looking at those charts and looking for the opportunities for entries. We're going to be relying quite a lot on pending orders, because I want to see it break certain levels or continue in a direction before I want to get into a trade. So pending orders are going to be our best friends in this kind of market climate. And that is going to be it. My final words here. As always, I try to leave you guys off with a little bit of words of wisdom, if I may use that term. And today is trading should be boring, except when it's not. I was discussing with one of my client students this week on last week's gains, that trading successfully is best described as boring, 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 boring. Oh my God, boring, 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 boring. Oh my God, boring, boring, boring. Great gains come very infrequently, but regularly. The rest of the time, you're either making a few dollars here or losing a few dollars there. This key thing is you never know when those oh my God weeks are going to be arriving. So the only thing we do is make sure that we're always in the game. We're always trading in a very careful, measured fashion, controlling our risks, but at the same time leaving the accounts exposed to take advantage, to take those gains, those big movements when they come. You've noticed that I rarely put a limit on a trade. I don't like to say that I'm looking for 100 pips. Why? That trade may move 500 pips. Why am I going to be taking only 100? So I control my losses via the stop loss. I let my limit, my profit, uncapped. Let it move as far as it will. I'm much more likely to get out of a trade on a trailing stop than on a limit, though. Now and then on the sideways market, limits do have their place. But for the most, I'm trying to get those oh my God weeks, even though I don't know when they're coming. So that's what it is. You should not be getting your kicks from trading. Every week is not going to be an oh my God week. And the boring weeks are very necessary, because they're the weeks when we're setting the account up for those bigger moments of success. That's the end of the spiel for this week. As usual, I have my request, a plea for help here. And this is for, and a lot of you have emailed me. I'm always looking for more suggestions. How can I help more people with what we're doing, and help the right people? I realize I cannot help everyone. I'm not trying to help everyone, but there's a nice chunk, a nice slice of the pie of people I think I can help very easily, if only I can get myself in front of them, or if people can throw them my way. So suggestions, or even, send people my way. Thank you. I appreciate it. And that is the end of our presentation for today. Does anybody have any comments or questions? Okay, thank you very much. And we will be back tomorrow at the regular evening session. Thank you very much. Have a good one.